Welcome, I'm Ernie Goss, research faculty member here at the Craig School of Business at California State University, Fresno. And as usual, this is the first business day of the month of May, and I'm here to report on our survey findings for the four-county metropolitan area of Fresno for the month of April. What is it telling us? What is it likely saying about the future growth for the metropolitan area? Well, the number was very good. That's, again, the overall index, which is a leading economic indicator. It spans ranges between 0 and 100, and 50 is growth neutral, so above 50 is growth positive. Well, it was above 50 for the 17th straight month. So this, the Fresno economy, the San Joaquin Valley economy, as we call our survey results, it's looking very good. It's been growing and growing. Now, unemployment still remains much too high, above 10%. Of course, that's not good for any area of the U.S., we're growing, adding jobs, and things are looking better. But as I said, the overall index was up to 59.9. I didn't say the number, but it is 59.9, and that's up from 57.2 last month. Now, why is 59.9 important? It's the record. It's a record, or at least it matches the record we recorded last November. So that's very good. Now here you'll see, I'll bring up a chart here showing the U.S. versus the San Joaquin Valley numbers. There in red, you'll see the San Joaquin Valley, and you see that sharp upturn for the last 2 months. Now that's good. Now you look at the U.S. number, which is in blue. Now the U.S. number will come out for April, will come out later on this morning. I expect that one to be much weaker than the San Joaquin Valley, but you see the gap between the two, and I have to say, when you look at other measures of the growth of the U.S. economy versus San Joaquin Valley economy, there is a gap. And then the San Joaquin Valley economy is outgrowing the U.S. economy. Inflation gauge for the month it went from 47 to 46.4. Now that's showing, I'll call that disinflation, meaning the inflation rate's coming down. We ask about the cost of purchases for the next year, up by 3%. They expect up by 3.8%. That's a little strong. We ask about the prices of products that the businesses themselves sell, 2.8. So that's, you see there, they're expecting the prices for the products and services they sell to grow at a slower rate than the ones they're buying for their inputs. Now in the employment gauge, if you look at that, was 63, went from 63 to 64.9 in April. That's, I won't say obviously, but it is obviously a good number, very solid. We ask them about how much they expect wages to grow by in their companies over the next year, 2.1%. That's about in line with what we're likely to see. I think that's probably going to be it. We'd like to see it stronger. Exports for the month were down. Now that's troubling, but that's the strong dollar's dampening exports. Moved down to 50.6 from 58.4. Quite a bit of a drop there. Confidence was 58.7. That's down from 63.5, but still a pretty good confidence number. Most of the survey participants are pretty positive about the economy, even though the GDP number came in, of course, this week for the U.S., not good, 0.2%, and we're saying it was weather related. Well, if you live in Boston, it's weather related. If you live in New York, weather related. For the rest of us, not so much weather related, so I don't accept that as an excuse. This economy is just growing too slow. That's the U.S. economy. San Joaquin Valley, good growth. Now, what should you watch for in the next month? What are the indicators that I think you need to keep an eye on? First and foremost is jobs report, which comes out 1 week from today. That's next Friday. That's May the 8th. That's going to be important. I expect the number to be pretty good, but I look at the wage number behind that. Look at the wage number and see if that's going to be picking up. I don't expect it to, but if that number were up sharply, that would be a bit of a problem in terms of interest rates. The Fed might be moving higher on interest rates. I think it's going to be a pretty good employment report, though. The CPI on May the 22nd from the Bureau of Labor Statistics, keep an eye on that number. That's going to be a pretty important number, because if inflation begins ticking up even more meaning from from its current 1.8 to say something like 3% year over year and even higher, then the Fed's going to have to be raising rates. I don't expect the Fed to raise rates, probably not before September, maybe even later in the fourth quarter of 2015. Keep an eye on the 10-year Treasury. Now that's been a little key right there. It's up above 2% now, and that's interesting. It was down to 1.6% interest on a 10-year. And why is that up? Well, it has a lot to do with inflation. Inflation's up a bit. And of course, what's really driving inflation higher is higher rents. Rents are growing at a pretty good rate. Of course, energy is coming down, but it's stabilizing there. What are the risks? In other words, I'm saying the San Joaquin Valley economy is going to grow for the next 3 to 6 months. What are the risk factors? Long-term interest rates. If long-term interest rates should spike even higher, I don't think they are, but that would be certainly a risk factor. What would cause that? Inflation up dramatically. As I said, I just don't expect it, but that's a risk factor. Greek default on their bonds. The Greeks keep rattling their sabers, saying, hey, we may default, we may not pay our debt. That's troubling. That, of course, would shake the global economy, and it would shake confidence in the economy. And that would, believe it or not, that would push interest rates down, because all these investors flee, put their money in the U.S. bond market, and that brings our rates down. So I don't think the Greeks are going to default, but who's to say? Finally, U.S. dollar. Been very strong, but it's starting to stabilize a bit, and that's good. Maybe even weakening a bit, certainly against the euro, as euro gets a little stronger. Now, that would be good for exports if it weakened. Now, I don't expect it to really weaken as much as just stabilize right where it is, and that's a good thing. And of course, what the strong dollar is meaning for our businesses in the San Joaquin Valley, just means those profits they earn abroad, when they bring them home, they're worth less. They earn the profits in euros, and of course, when you bring it home in dollars, when the strong dollar just brings those down. So those are the risk factors. That's what I think you need to look out for. It was a very good report, as I said, one of our best ones in some time. So until we meet again on June the 1st, first business day of the month of June, reporting on May survey results. Between now and then, may your economic cup runneth over, and thank you.